R. Srikrishna, Chief Executive Officer and Executive Director at Hexaware Technology, is now joining us. Mr. Srikrishna, thank you so much for taking your time out. And after first quarter, you did tell your investors that the company will match calendar year 2025 growth of 7.6%. But after the second quarter, now you've said that the path to 7.6% has now narrowed because of delayed ramp-ups and a weaker macroeconomic environment that we are now living in. What exactly has changed over the last 90 days? If you can take us through that for the benefit of our viewers.
The situation around the world in macros has not helped. We all know the Middle East situation has continued for far longer. And, one of our sectors, travel and transport, much of which is airline, is quite significantly impacted because of that. In fact, that sector is down for us 18% year on year. And in addition to that, there are at least 4 deals that we won in Q1 and Q2 where the ramp up should have been complete by now. The good news is the ramps have started in some cases or are due to start later in Q3. So they're all happening, but there's a right shift of 2 or 3 months. And we felt like it's better to be conservative because we don't have much runway and let everyone know right now that we do not do those. So that's the reason.
So that's the view coming in on the macroeconomic environment, which continues to remain uncertain. Mr. Srikrishna, first and the second quarter revenue now totals to about $800 million US. And to hit the original 7.6% on the calendar year 2025 base of 1537 million, I believe you will need an additional 860 million in the second half of this year, the remaining 2 quarters. With the narrowed part, what CQGR or compounded quarterly growth rate do you need in the second and third quarter, and how realistic it is given the delayed ramp-ups that we are seeing?
No, we do have a pathway to get to 860. Nevertheless, we got it down. We said we will now do a midpoint of 6.5%, 6 to 7, midpoint of 6.5%. For doing that, we just need a CQGR of 2.7%. And we're very confident doing that.
Okay, so confident of achieving the target for the full year, that's the word coming in. Mr. Srikrishna, across the IT industry, we are also seeing AI compress project sizes, even as demand continues to remain healthy. Is the company today facing more of an AI-driven pricing deflation problem or a macro-driven demand problem? Perhaps that's something that the entire industry is facing.
So there is some AI deflation in our business. We were amongst the first companies right in early this year, Feb this year, to say, at that time the community was still mixed from the industry that demand will outstrip the deflation. We said there will be net deflation this year, and it is happening. I think that we had accounted for. Maybe there's a little more than what we had accounted for, but we had planned for some deflation.
Let's also talk about the segment-wise performance in that case, Mr. Srikrishna. Banking and manufacturing and customer segments are expected to lead calendar year 2026 growth, with professional services and financial services following. Can you give us a sense of relative growth differentials between all of these segments?
If you look at even this quarter numbers, right, that H&I and manufacturing are actually growing in high teens. And they could, be in that range when we finish the year. And banking was double digit. And PS is actually negative growth for us, but it could improve a bit for us. It was slight negative. FS is slight positive. And GTT, like I said, travel is severely negative, minus 18%.
Let's also talk about the transport and travel segment, and there has been significant underperformance as far as this segment is concerned. What are the factors that are leading to this underperformance, and is the trend changing now?
Well, for this year, you should model it as a drag. Okay. However, we are looking at multiple things to see how we can de-risk ourselves better through these cycles. Clearly, one of the subsegments in that we are not in is logistics. We have some presence in hospitality, but not a lot. So, especially logistics will de-risk us from future cycles. So, certainly, it's not a long-term drag, but for this year, it will be a drag.
You've also repeatedly called AI in the SDLC the biggest source of differentiation and deal activity. Can you share any metrics, percentage of deals that are influenced by AI capabilities, productivity gains already realized, or revenue contribution from AI-enabled offerings so that we can perhaps gauge the challenges that you're facing as a result of AI?
So there are three different questions there. First, I'll say that virtually 100% of new deals are in some way or the other influenced or impacted by AI. Virtually 100%. Any single deal we do, either an incremental business with customers or a new client, proposals are based on fully baking in the value of AI. So that part is 100%. Second, I mean, what percentage of our revenue is AI infused? Again, if you look at it, every new business we bring in from now, the revenue from that is AI infused. So it's a significant percentage, and I will say that it will keep increasing.
And where are clients now becoming more cautious today? Is it new discretionary projects? Is it transformation spending or decision-making timelines? Are there delays in decision-making?
Decision-making timelines, I think, are okay. People are wary about committing to large transformation programs. That's been true for different reasons for a period of time, but it's a lot more true today because of AI. The second is that it's none of these factors. Really, the bigger issue is how much money is going to go to tokens and how much money is going to go to human labor. That factor, I think, has a bigger impact on decision making and budget allocations to our industry than any other factor.
Okay, Mr. Srikrishna, thank you so much for taking your time out and joining us here on ET Now and sharing your thoughts on where the company is headed in the near future. Thank you for joining us today. With that, it's a wrap on this edition of the show. Thanks so much for tuning in. Next show will come up.